Hi, and welcome to this week's ATL Home Market podcast. I'm Ira Miskin. I am a broker and team leader for your home sold guaranteed Realty, the Miskin Team, along with Stephanie Miskin, who's co-team leader for the Miskin Team, and Josh Collette, who is our associate broker and also senior advisor for the team. We want to thank you for joining us and look forward to having a really good discussion this week, which is going to be a really interesting topic. It's one that has a lot of moving parts to it. And we're going to try to focus on some of the elements that are most important. And it's about what it takes to be able to get financing to be able to buy your home. Now, you may be a first-time home buyer, or you may be someone who wants to either move up to a larger home or downsize. So you have a home to sell, but you need to buy. Either way, it's likely the majority of the time you're going to need to finance that purchase. So we're going to spend a little bit of time really talking about some of the nuts and bolts of it so that you get a sense of what you need to know and how to actually approach that whole process. But first, before we do that, I want to just hand it over to Stephanie for a minute because she's got, as she does every week, some really fun things that are going on around Metro Atlanta that I think you'll enjoy and that you'll want to participate in. Stephanie, take it away.
Yeah, hey guys, hope everyone's doing great today. Hope everybody had a fun Mother's Day and was treated appropriately. Yeah, I have some great events I want to tell you about. The first one is in East Cobb, and it is the Great Marietta Greek Festival at Holy Transfiguration Greek Orthodox Church in Marietta on Trickham Road. This is the 35th year that this is going to be going on, and it is so much fun. If you can't travel to Greece, this is going to be the next best thing. It's going to be on May the 16th, 17th, and 18th. There's going to be great Greek food, music, dancing, and Josh is going to have a little clip for us, show you a little bit about what some of this dancing is like. I think he'll pull that up in a minute. There's going to be great, beautiful grounds that you can wander around and see not only dances, but also the food, the amphitheater, there's going to be a children's area. It's just great fun. The admission is low. It's only $5. Kids under 12 are free. It is rain or shine. And so come prepared to eat and have a great time. And that is, again, Holy Transfiguration Greek Orthodox Church on Trickham Road. It will start at Friday, 4 o'clock in the afternoon, go to 10:30. Saturday, it opens at 11 a.m. and Sunday, it also opens at 11 a.m. So try to get out there and have a grand old time. The next thing I want to talk to you about is going on at the Atlanta Zoo. And this is called Twilight Trek. And basically it is an after hours discover the zoo when nobody else is there except you and the animals. So this is going to be a guided tour. You're going to participate in the adventure, exploring all the wildlife research technologies while you see what the animals do when the humans aren't there. You're going to get some hands-on with some technology that they use to study animals. And you're going to have forward-looking infrared FLIR technology, trail cameras, night vision, all kinds of fun things. The kids are going to love it. You have to register for it. So you have to get online and you have to register for it. These are the dates. So it will be May the 16th, May the 30th, and June 27th at the Atlanta Zoo. It will start at 6:30. It costs $27 a person, and children 2 and under are free. So that should be lots of fun. Make sure that you register and go out there and see what these guys are doing at night when none of us humans are there. And last but not least, in Duluth, there will be the Duluth Spring Arts Festival. And this is going to be with an emphasis on visual arts and family fun. It's a 2-day event, and it's going to be taking place in, let me make sure I got this right, on the town square in Duluth. It's going to be on Saturday from 10 to 5 and Sunday from 11 to 5. There'll be lots of children's activity, music, food, great arts. It's a juried show, so you're going to see some really good things. And yeah, so get out there over in Duluth, over in that neck of the woods, and have a good time. So we got something going on in Cobb, something going on in Fulton, and something going on in Gwinnett. So I hope you guys get a chance to enjoy some of these events and have a great old time.
And see, one of the things that I like best about the events that Stephanie finds is they have food.
Yes, they all have food.
Yes, they all have food, and it's all kinds of different food. And I will tell you one of my favorites, because we lived in the area of where the Greek festival is going on. We actually remember a time when they had the Greek festival, but the church hadn't been built yet. And so we've been in and out of that and been eating some of the best, essentially homemade Greek food you could have, better than any restaurant that you've ever been to, because it's really moms and pops who are cooking all that food and all of that at the event, plus the dancing, plus the costumes. It's a lot of fun, a lot of fun. And I've been to Greece, and I'll tell you that the folks and the dancing and the food is just as good as the folks and dancing and food that I experienced when I was in Greece. So that's my favorite if you wanted to pick one.
Yeah,
it is. Let's jump into what the topic is for this week, which is looking at how buyers are able to look at the landscape and understand what financing is all about. And because Josh has spent a great deal of time over the last 15 or 16 years helping home buyers to figure out their financing issues that have changed and evolved, and yet there's been a lot of similarities year over year over year. Josh, when you meet with a buyer, especially if it's a first-time buyer, are there any things that you need to know? What are the kinds of things that you talk to them about to try to get a sense of their finances, their background, their concerns, when you're first getting this process started?
So so one of the biggest things that happen when I'm speaking to, especially a first-time home buyer, is that there's a lot of anxiety in the idea of just getting a loan in general, just applying for the loan. So it's pretty straightforward in what the requirements are, what the basic requirements are. If you're getting a basic FHA loan or a basic conventional loan or even a VA loan, there's other loan types that are a little bit more, esoteric or more, streamlined for different people in different situations. But the general criteria are, they've been in the same field for the last 2 years. So whatever they work or whatever they do, say they were a plumber, they've been a plumber for 2 years. You could have been with multiple companies over those 2 years, but you were still generally a plumber. Same thing. Do you have any derogatory payments or any derogatory items on your credit? And just really getting a good grasp of what's on there, what's on your credit report, and knowing what your debts are. Because one thing I see a lot is someone may make a good income or a decent income, but because there's so many derogatory or late payments or whatever it may be on the credit report, they can't get qualified, or their income, their debt income ratio is substantially higher on their debt side that they don't really have enough to afford the home they're looking for. And there's ways to overcome that, and it's just really about being prepared when the time comes.
Yeah. So when you're chatting with them, and this goes for both somebody that has a home to sell and wants to buy another home, and maybe using some of the money that they get from the sale of their home to buy the next home, but they're still going to need a loan to buy that next house. And so they have to qualify for a loan. Are there any commonalities among buyers, or really are they all very different from buyer to buyer?
There's certain commonalities, but if you're looking at someone who owns a home already, they're going to purchase their next home, and they need to sell their current home in order to buy the next home. There are a few things that we've really kind of developed to make that easier, because the biggest concern, more than likely, and really over the last 16 years, is always this: they're worried about the possibility of having two mortgages, finding that next home, buying that next home, and then not being able to get their home sold. Or finding some reason where, or some situation where they have no home. So they sold their current home and they don't have the next home. So there's ways where we actually can get you pre-approved to buy your next home first. You're in there, your next home. And during that time, your monthly mortgage on your previous home is already paid. So you have plenty of time to get your home sold. So you never have to worry about the possibility of having no home. But when it comes to, say, a first-time home buyer, when it comes to financing in general, I like to think about it from the point of view of, really in the point of view of, if you're looking at getting a loan, whether you have a home or don't have a home, you have to look at from the creditor's point of view, someone who's giving you the $200,000, $300,000, $400,000, $500,000, and making sure that you're worthy of getting that money, that they feel confident that you're going to pay that money back. Those are the most common. It goes without all loan types.
Yeah, because it's funny. We say, well, we're going to get a loan, but that's a company, a group of strangers who are looking at you, and you say, "Hey, come on, give me $300,000," and they say, "Well, we would like to do that as long as we have some assurance that you can actually pay that $300,000 back."
And it's funny too, because I'll talk to some, especially first-time home buyers, primarily first-time home buyers, and the first question I ask is, "Okay, do you have a job?" And 99% of the time, the answer is yes. Whether they have a job a month or 10 years is a different conversation, but 99% of the time, the answer is yes. But there is that 1% of the time where the answer is no. And not really much you can do about that. And I've gotten people hired. Because I speak with so many people, and I network and have so many, work with so many people over the years. I've gotten people jobs just because this person's here, and it just lines up perfectly. But the question you asked earlier is, are there some commonalities between whether you have a home or not have a home when it comes to loan types? Number one, you do have to have a job. So let's just get that out the way.
Yeah. And jobs come in all different types, and that makes a difference in the kind of loan that you get, because there are people who have jobs and they get paid a salary weekly or bi-weekly. Taxes are withheld. They are W-2 job holders. And then there are people who they work, they have a job, but they are not what you call W-2 staffed employees. They are independent contractors. They're 1099 individuals, and they have a job. They're employed by themselves, and they are selling their services to an individual or a group that is paying them for their services. And lenders look very differently at people who have a Monday through Friday W-2 job versus people who have a Monday through Friday or Monday through Sunday 1099 employment situation. And all of that is part of the process of sorting through whether you can get a loan, but what kind of loan, and what lenders work with the different types of employment situations, because they're set up to understand both how to receive your information and also know how they can get repaid based on how it is that you get paid and get employed. But Josh, before we move on, one of the things,
add something to that. So a little that goes along exactly with what you're saying. So I had a guy, a really good friend of mine. He became a good friend of mine. He was actually one of my next door neighbors, and he was a professional golf caddy, and that is what he did. That was his job day to day. That was his job. And I don't know much about golf. I played golf, hurt my back, and didn't play again. But one thing I understand about golf is for a short amount of time. You have a set time of the year that you play golf. You're not, there's not many golfers that play in a blizzard during December. So what occurs is he worked for 3, 4, 5 months a year. He was a professional golf caddy, so he actually made a decent income from with that money. He saved it, and then he worked in his garden the rest of the year. Every time I saw him, every time I went home, every time he just worked in his garden and yelled at kids for walking near his garden during the day. Still a great guy, but that's what he did. That's his life. But he was able to buy a home, and he was able to buy a home even though he worked 4, 5, 6 months a year and worked in his vegetable patch the rest of the year. He was able to buy a home because they were able to use his income, average it over 2 years, and he was good to go. So there's a lot of different loan types. Some don't require taxes. Some that we can go through each one of those, but there's a way, depending on who you're talking to and what lenders you're speaking with, and there's a reason why I recommend mortgage brokers versus say a bank, and we can get to that if you're interested.
Yeah, that this whole front end of thinking about what you need for a loan. Do you need a loan? What kind of loan might you need to get? And what do you need to do in order to get qualified to get that loan? Those are all important elements of the loan. But let's say, for example, and we may talk about this a little bit later, you're in a situation where you make a very good living. I'll just pick a number. Let's say that you earn $100,000 a year. Well, that $100,000 a year has to get spent in a variety of different ways. And there are some people that make $100,000 a year and they spend $120,000 a year. And so they have high credit card debt. They're what they call debt to income ratio, meaning how much money do you owe versus how much money do you earn, and what's the right proportion. That's an important part of what lenders look at. You also may earn a lot of money, but you're terrible at paying your bills. And so your credit scores are low, need to be above 600, preferably in the high 600s, even better in the 700s, because the higher your credit score, the lower your interest rates are going to be, the more options you have in being able to get a loan, the more assurance from your strong credit score, which, because that documents how you pay your bills, that gives more assurance to lenders, all those sorts of things. But a lot of folks, their credit is not perfect, and they have to do things that will get that credit to be more perfect. And it may take anywhere from several months to several years to do. And that takes patience and perseverance. And sometimes it takes some hand holding and hugging. And Stephanie, I know over the years you have worked with folks that have had to work on getting their credit in order. What do you do to encourage people to stick with the plan, to talk about their achievements? Hey, my credit score went up 5 points this month. Hey, I paid down my credit card. Hey, I didn't get a new credit card this month. Hey, guess what? What do you do to help them to stay on track so that they can actually achieve their goals?
Well, one thing that's really important to do is to get them with a loan officer that can really explain to them what they need to do, because sometimes they think, well, if I just pay off this credit card, then I'll be good. It might be the polar opposite of what the loan officer thinks needs to be done. So the first step is to really have good communication with whoever the loan officer is, and a trusting relationship, so that they can not only call me, but they can also be in communication with that loan officer and tell them and have a plan and stick to the plan. And like you said, absolutely, there's conversations that go on, depending, probably, I would say, either weekly or bi-weekly, on how are you doing, what's going on. And I think one of the big things that really helps people, because this can be really hard for people to do, they really want to get in a house, but they got to do this, and their lease is running out soon, and they feel pressure. So one thing I like to do with them is kind of sort of get a ballpark of where they can buy. Like maybe we know that they can buy somewhere between, let's argument's sake, say 300 to 350. So while they're doing all of this, we are looking at homes. Okay. We're going out, we're looking at homes, and this kind of is a motivating factor for them to keep going. Like I really love that house. Well, you know what? I don't have to go out to dinner this weekend because I really like that house. And maybe if we, stop spending so much money going out to eat, we'll be able to find a house like that. Even if we do it quick enough, get that house. And so I try to do that with folks on a continual basis.
Give them incentive to
Yes.
help them to stay motivated to reach the goals that they set for themselves.
Correct.
Because for a long period of time, people can tend to get distracted, discouraged. Oh, well, heck, I'll renew my lease and I'll pay my landlord's mortgage and I won't benefit from it at all.
Right.
As opposed to being able to see the longer game.
And what's important, I think, too, is but when we talk to the loan officers is going to give us a ballpark. They're going to give us an idea, say 300 to 350. So one thing I learned really early on while I was in the field showing property, if you qualify for 300 to 350, you don't want to be looking at $500,000 house.
Never.
Never, because you ain't never gonna like that $350,000 house. So we need to know that out the gate. What's your parameters? Where do you fit so that I can show you what a $350,000 house is like? Find you the best $350,000 house, but do not show them a $500,000 house because they'll get discouraged. They won't like the 350 and they'll say, "Oh, I'll just renew my lease." And then they're paying somebody else's landlord and not building any equity or financial security.
Yeah. And see, whatever they're shopping for, it's still a place that is going to be made into their own.
Yes.
If they buy, a house and they move in and the walls have just been painted freshly and the carpets are clean and they put all their furniture in, over time, they're going to transform that house into their house as opposed to the house that they bought. And so being able to just think about, hey, if you had a house like the house that we saw this afternoon and it had that big open living room, how would you decorate it? Would that be a great place to turn into, a play area for the kids, or would you use that for a play area for adults? What would you put on the mantle of a fireplace like that? How do you make that your own and help them to start seeing what the future could be and how they would make the place that they purchase their own, which they absolutely can't do if they're a first-time buyer or they're a renter and a buyer, to make the place that they're renting their own because it isn't their own. Those are all things that are important because people just need to be helped and encouraged and focused, and just be there to help them to reach the goal that they have, which is to have that home and have that security that owning a home has. But then they have to think about, in addition to obtaining the loan, now you've got the loan, now you've got the house. What is it that it's going to cost in order to manage the ownership of that home? Now, if you're renting and you're paying, let's say, $2,500 a month to your landlord, a number of the expenses that go along with the landlord owning that property are incorporated into the amount of rent that you pay. But you are paying all of those expenses when you are the owner of the home. And so when you look at what the monthly cost is for owning that home, you have to calculate a number of different things. That all becomes one big number. See, people think, okay, I'm going to get a mortgage and the mortgage is going to be $2,500 a month. But if your mortgage is $2,500 a month, there are a number of other expenses that go along with it that get added on top of that $2,500 a month. So maybe you need to look at your budget, your income, what your other expenses are, and say, well, I can afford $2,500 a month to go towards the mortgage on my home. And your mortgage payment, your monthly payment, includes a number of different categories. Number one is the actual, what we call principal and interest that you pay on the loan. Every month you pay a certain amount of interest, which is the income that the lender earns for loaning you the money. And a portion of that monthly payment also goes to pay down what you actually owe on the property, to reduce the amount that you owe to raise the amount that you own on the property. That's called principal. But you also have an additional group of monthly payments that go along with it. Property taxes are paid in the very beginning. When you get your loan, you pay a certain number of months in advance, and then on a monthly basis, you will pay 1/12, a percentage of your property taxes each month, held by the lender, who then once a year at the appropriate time pays the property taxes. So the amount of property tax goes in on top of your mortgage payment. You're also doing exactly the same thing for your homeowner's insurance, paying your first year upfront and then paying in advance every month as part of the monthly payment to your lender, who holds that money, and once a year they renew your property insurance. If your loan is 80% of the total price of the house or greater, you're paying mortgage insurance to help ensure that if there's any shortfall or the mortgage is not paid, there's an insurance premium that's paid to help the lender to be able to get paid. And that goes away on what's called conventional loans after you've paid off 20% of your home. But it is always paid every single month on both FHA and VA loans. And that's a monthly expense that gets added in on top as well. And then you just have all of your general expenses. Of course, you have to figure out what your utilities are going to be. So you have maybe gas, electric, your water bills and sewer, extraneous costs and payments, pay the company that comes around and sprays for bugs and boogers once a month or once a quarter. And so you really have to have a nice list with calculations of what the monthly expenses are going to be, so that you know what above what your actual mortgage payments are needed to be added together, so you know what the total number is. And if the total amount that you can spend is $2,500 a month, then all of those different calculations have to be put together to add up to $2,500 a month. And then based on that $2,500 a month, that tells you what the purchase amount is on a home that $2,500 a month will cover. Is it a $300,000 home? Is it a $400,000 home? And that's all based on what it is that you can actually afford to pay in order for you to maintain the house, because all of those expenses are included when you're paying your monthly rent, but the landlord is actually making those payments. And on top of that, he's figuring a percentage of that for his own profit as well. So those are things that are part of the calculation. And again, a good loan officer, as well as your real estate advisor, is going to help you to think through all those different steps and to calculate what those numbers are based on your income and what your other expenses are, so you can make those kind of payments. But then you have to think about, how much money do I need in order to be able to get that loan? What are the different parts? One of the parts is a down payment. The other part are all of the expenses that are associated with getting that loan closed. And for some people, And particularly for first-time home buyers and younger folks who have not yet learned how to effectively save money, there are lots of times, and Josh can confirm this, where you talk to people, and again, they make a good income, but they only have $2,000 in their account. They haven't saved any money, yet they can qualify for a loan if they had the money necessary for a down payment. Well, there are a variety of good loan programs that are available that you can get assistance for that can help you to deal with having the money necessary for your down payment or no down payment at all. Josh, can you detail some of those different kind of programs that you talk about to folks to give them an idea of what they might qualify for and how that works?
Yeah, so there's actually a lot of down payment programs. There's a lot of DPA programs. So
By DPA, you mean down payment assistance programs.
exactly. And the way it works is depending on your situation, some are better than others. Some have, better interest rates. Some have better loan forgiveness terms. But one thing I do want to say, there's no free money, but there are ways to make it where it's a lot more lucrative to move forward with a down payment assistance program versus staying in that rental for another year, 2 years, 3 years. One thing I always say to literally everybody, home buyers, home sellers looking to buy is, why are you moving right now? Why not? Why didn't you move 5 years ago? Why aren't you moving in 2 years from now? Like, what's special about right now? And one of the answers I get is interest rates, or I get, we don't have the money saved right now, or, a lot of times it's one of those two. And what I always recommend to people is once you, especially first-time home buyers, is unless you're actually in the property, you're only at a negative. You're only at a disadvantage. If you're renting, you're only at a disadvantage. There's no way you can benefit by being a renter when it comes to building equity, actually having something that's your own. Because as a renter, I don't care how great the rental is. If you don't own the property, the landlord can tell you to move tomorrow. They have a family member that needs the house. This is a conversation I had yesterday. They have a family member that needs the house. I'm sorry, but we're gonna have to end the lease, and you need to find a new place. You've been there for 7 years. It really doesn't matter. We need you to vacate. So down payment assistance is one of the great ways of getting into the property, so that at least you have the opportunity to start building and raising your property, raising your equity, raising your actual your finances while you're in the home versus just paying someone else's mortgage. So a couple of down payment programs are one, it being, Chinoa. There's Chinoa, there's USDA, there's Georgia Dream, there's actually another type of loan called the USDA Farming Rural Loan, which is kind of weird, but love it. There's the Movement Boost program, and they have different caveats for what they offer. It's different requirements. So some require a 600 credit score, which is actually pretty low for down payment assistance. There's some that require, of course, tax returns, some that don't require tax returns. Some require you to be in rural areas. So areas that it's based on population. So it may not work in downtown Atlanta, but if you want to be in, a little bit further west in part of Douglasville, that you'll be fine, or Covington, or you go further north towards going further north towards, say, Ball Ground or certain parts of Canton, they'll work. So there's a lot of different programs, and we actually have a link that, if there are some down payment programs that may be specific to an individual that I can't even necessarily talk about. And what I mean by that is there are some Native American down payment assistance programs that will be available only to that particular group, or if you work at a particular company, they'll only be available to that particular group. So there's actually a link that we can send out, and that I send out to my clients to say, okay, I have these programs available for you that I really think may work, but you're 1/4 Native American, so you are eligible for these programs too. So complete this little link. Doesn't cost you anything. Takes about maybe 5 minutes if you type slowly, and you'll find out you're approved for something else. So there's a lot of different programs, a lot of different ways. But the one thing I always say is, why aren't you in a home right? Why are you buying a home right now? Why didn't you buy it 5 years ago when you first had that thought to buy a home? And how much better would you have been if you bought that home 5 years ago? And one thing I truly believe is, there's a quote I always say is, The best time to plant a tree was 10 years ago. The next best time to plant a tree is right now. So I always recommend that. I always recommend moving forward, because renting is never going to help you. It doesn't have an option to help you.
There are also for folks in particular categories, like, for example, if you're in the military or if you're a former military, there are VA home loans. And those loans are excellent, because those loans require 0 down payment. Now, that means your monthly mortgage rate, your mortgage payments may be a little bit higher because you're not putting any money down, but it also means that you're not required to have that 3 or 3.5% minimum that's needed in order to go ahead and purchase a home. Now, you can get a VA loan and you can put money down, and VA loans aren't really tailored towards the people who are current and former military, and they're excellent loans. But those are loans where if you don't have the cash on hand, you can actually purchase a home and not have to put money down. USDA loans, which are loans for people who are living in more exurban and rural areas, are also 0 down payment programs, and those are governed by FHA. So down payment assistance programs, 0 down programs, low down payment programs, those are all programs that are available for people. So having an advisor and a loan officer that is part of the advisor's team that can help you to look through all of the different possibilities, well, that's what you want to do in order to not only make the decision to buy a house and get a loan to do it, but once that's done, to now look at what are all of the options and possibilities to be able to get the best loan most suited to your needs and to your finances, and what do you need to do to put your finances in order to get that loan that is best suited for you.
I want to add something regarding those VA loans, and it's something that I've noticed over the years. A lot of buyers, and military especially, of course, VA loans, they don't know how VA loans really work. I don't know if no one's ever really taught them. They hear things. I've gotten phone calls, and I've had conversations where they have heard about VA loans in passing, and they never really were taught how VA loans work. So, of course, no down payment. There's ways that we can make it where, and the lender, we work with the lender to make sure that there's this thing called a VA funding fee, which is a fee that they charge on top of the loan. It's not something that you have to pay up front, but they'll add to the loan. But there's ways that we can get that completely removed. There's ways that a lot of people have used VA loans to eventually turn it, their primary residence eventually turns into, an investment property. So a lot of people just don't know the ins and outs and how you can use these loans in all these down payment assistance programs. And even if you have to pay an extra $100 or $200 a month, and then you actually own the property versus renting, it is, again, still beneficial for you to buy a home and pay a little bit more than to rent and get nothing. And then on top of that, can be kicked out of your house at any point in time. So I get emotional about that because I've had too many experiences of people that were kicked out. I've had clients that have moved in because they were kicked out of their rentals, and I had to help them one way or another. I found other rentals for them. I found other places for them to stay while they got their places in order because they were planning on buying. And then the landlord actually heard they were about to buy, felt that they wanted to find another renter, another tenant for the property quicker, forced them to move up sooner, and they had no place to go. We had to find them short-term rentals just so they can get to their next place. So I'm very big about moving. Get into a house now. Go ahead and buy it now if you can. If it makes sense for you to, go ahead and buy it now, because rentals, you have no control. It cannot benefit you. There's very little ways where a rental can benefit you.
See, now that doesn't preclude you becoming a landlord.
No.
Because there are so many people who either can't or won't take the step and won't do the things that are necessary to take that next step. and they just need to rent a property. And so not only is it a great opportunity to own your own home, but eventually it becomes a really good opportunity to be able to own additional properties so that you become the landlord, so that you gain the opportunity from all the people who can't or won't take advantage of the opportunity to be able to own their own home. As a last little bit on this topic before we come to the end of this today, Steph, as someone again who has really hugged and encouraged people over the years, a lot of folks over the years, what do you do? What do you say to just keep people keep their spirits up? In addition to showing them houses and some things of that sort, is there something that you really can do to just help them as time moves on to just stay on beam and stay encouraged and stay really happy about the idea that they're achieving?
Well, you have to take it on an individual basis, and everybody is different. But you have to keep the end goal in mind, and whatever it's going to take to keep that end goal in mind, whether it be showing them houses, so that's motivating them, or whether it might even be like, okay, so let's go and get a contractor and bring a contractor into a house that might need, for argument's sake, some kitchen work done. Because they might say, I really like that house, but I don't like the cabinets and I have no idea. So okay, so let's get a contractor. We'll go back to the house with a contractor, and now you'll have an idea exactly about what it would cost to renovate the kitchen. And some, people do get discouraged. I mean, I think about, a friend of mine that I helped along the way, and she had very specific needs, and she had to save money, and the whole 9 yards that we're talking about in order to get ready to buy the house. And sometimes you just have to use a little bit of humor in the whole situation. Sometimes she would get really down, and we would talk regularly. And I would do all of the motivating things that were necessary to keep her going so she could get to the end result. But every once in a while, she would just break down. And I looked at her one day and I said, look, there's no crying in real estate. And, I said, we will find you a house. There's no crying in real estate. And she cracked up, and, we eventually found her the house, and she got her financing in order. And so, you have to use a little humor in it, because it is a very stressful situation. Whether you have to save money or you have to improve your credit or whatever the scenario is to get you to that. But, like Josh said, you're paying somebody else's paying rent and paying somebody else's mortgage is never, ever, ever, ever going to help you out in the long run. So, you have to keep, reinforcing that stuff with people. And, maybe say, let's go out to lunch one afternoon. Let's not worry about this. Let's just, because you become their friend. I mean, most of my clients became my friends. So, because it is a very intense period in their life, and you really need to be there for them emotionally also. So that was one thing that I was usually pretty good at.
So when you make a decision about who you choose to help you, who your real estate advisor, your real estate agent is going to be, I strongly suggest that you really look at an advisor that has a very good team around them, because the advisor is going to be the center of the team, and they're going to be there to help you to take specific steps, and also be there to encourage you and help you to stay focused and provide you with information. But you need experts as well. You need an advisor that has a really good loan officer and loan system that you can look at and make decisions about. If you have to deal with taxes and finances, they need to have a good CPA as part of the group. They need to have contractors, as Stephanie said, so that you can look at and get costs involved in what it would take if you were going to buy a house that might need some upgrading and renovation so that you can make that all work. Because there's actually a really nifty loan. It's an FHA loan where you could buy a house that needs a lot of renovation, and you can get a loan for what the house would be worth afterwards. They give you the money to renovate the home. And so it's something to work on to achieve. There's so many different ways to do that. So you need a good advisor that has a team that can support all of the different steps that need to be taken so that you can get from the first day of saying, God, I think I'm going to buy a house, to the day after they move into that home, so that you can bring them pizza and Coca-Cola and say, congratulations, yay, you're in your home. And when you have your first big, I moved into my house party, let's all sing and dance together. Go to the Greek festival. Which reminds me, Steph, could you just give us just a brief recap of the 3 different wonderful events that are going on this week coming up?
Yeah, sure. Okay, so the first one was the one that Ira was talking about. That's out here in Marietta at the Holy Transfiguration Greek Orthodox Church. And that's going to be going on for 3 days. It's Friday, Saturday, and Sunday. Great. Just check it out. Great food, great dancing, great everything. And that's the one. Actually, I forgot to tell you, but that's the South's only Greek amphitheater. They have that church is built around a big outdoor amphitheater. So it's really cool. You get to sit out there and you watch all the dancing, and it's just lots of fun. The food is phenomenal. The other one that I was telling you about was the zoo, and that's Twilight Trek, where you wander around the zoo at night with the kids, and night goggles on and all kinds of stuff, and you learn about what the animals are doing when everybody else is not in their environment. And the third one was the Duluth Arts Festival. Again, a juried art show, downtown Duluth, great music, great food, great art. So those are the 3 things that will be going on. And those are all this weekend coming up.
So for Josh and for Stephanie and for me, we want to thank you so much for spending time viewing this week's ATL Home and Market podcast. If you like the podcast, when you're watching it on Facebook, just click like, which is nice. And if you'd like to see this and other podcasts we've done and other great videos that we have about real estate and what's going on in Metro Atlanta, subscribe to our YouTube channel as well. And if you want to get more information about any of the things that we talked about this week, there'll be links that you can click on that will take you to the locations of the different events and some of the things that we've discussed this week about home buying and home loans, and any other information that you might need. You can call us, you can text us, or you can click those links. So we look forward to seeing you again next time. And again, thanks from all of us for visiting us with ATL Home and Market. Have a great week.
Have a good week. Bye.